Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, the 16th of August, 2023. Now, before I get too far, I promised I was going to do another report for you, and I did. So now what we have is a special report on interest rate futures. The one I decided to pick isn't the 5 or the 10-year. I went with the 30-year bond. And I looked at it because here we have a long market. You know, the difference in interest rates, it's just 10 basis points between it really and the 10-year. So when you look at it, why would you go for that length? That's one thing I always ask myself. If one's 4.2 in a fraction and the other's 4.3 in a fraction, where are we? Well, let me tell you what's included in the report, because I think that will help you as you're trying to figure out what do you want to do, how do you want to do it, and where do you take all this. You're going to get seasonality. So I look at the 5, the 15, and the 30-year time frame in the market. The second thing that you're going to see that we look at with this, and I think it'll help you, is price counts. And I'm giving you where they're at in this market and how low this market may go. We're already at a very important area. That doesn't mean you can't go lower, so you're going to get that with it. Then I'm going to take you, and this is what, by the way, what the seasonal looks like. Then I'm going to take you on the daily and the weekly charts. So it's, again, one of these fun reports. It's a video. In order to see it, you have to go to our website. And when you go there, here's how you do it. You go to iraepstein.com under the word research. You can move your cursor up to the top here and get to it as well that way. I've already sent this out to those that are in my mailing list, so please enjoy it. My reports only stay up 3 business days. They're not a history lesson. They're for right now. So if you're interested, I strongly advise you go take a look at it at this point in time. Okay, so now let's go on. Remember, you can click at any point up on the top here on your computer. We had the FOMC minutes today, and to me, that was the important part of the day. And there's a battle going on. You know, there's 18 voting members, 11, let me say that differently. There's 18 members on the FOMC. There's 11 voting members. The votes were unanimous this time around, but there's dissension brewing. And if you looked at the non-voting members, out of those remaining, it appears 2 people would have voted against raising rates as they were. Now, the problem that the market is facing is inflation continues to move on. The economy is stronger than we thought it was going to be. And the Fed's not getting the speed they want. We're getting close to that 2% goal. The one thing that I saw very evident, the Fed is not changing its mind on getting to 2%. Now, once it gets under 3 in the headline, who knows what they'll say, but I think they'll wobble a bit. They'll come up with reasons, well, we can watch the lag effect and see what we do. But they will hit just what I've been saying, that sticky point where if you don't push the market, it doesn't fall on the core inflation where you want it to go. And the Fed doesn't look necessarily at headline getting the 2. They want to see that core come around. So keep that in the back of your mind. As interest rates go higher, the dollar goes up. What happens with that? Pressure on the gold market. So here you are for the week, down 0.88%. Look at the decline that we've gone with. Not a surprise to me. Lower highs, lower lows running. Each day has had a lower low. Are you noticing what this market is doing? That's unusual in itself. Now, we're about to get a bearish crossover where the 18-day average is preparing to get under the 200-day average in gray. And where's the market? Just running the Bollinger Band. So on hard rallies, I think you'd see that's your resistance zone in the market, and you have an embedded rally. So this market still very much in the bear camp. August gold versus Sep silver. Silver's not even trying to give you much of a correction. And here you are, and this has been an easier market to get short. For those of you that get my updates, you know what I'm talking about because you're probably in this market playing it accordingly. We had a bearish crossover today. You see how the 18 got underneath the 200? That one's occurred now, right now, as we're talking. Target might be a challenge under the 2200 zone in this market. Copper market. Things are so bad in China, and they are bad, that the government today told stock trading firms, and this is a report that I read. I haven't seen the actual verbiage. I couldn't read Chinese to begin with, so I'd need a translator to do it. That let's assume you get an order in to sell 1,000 shares of stock in X company. Don't do that unless you have 1,000 shares to buy in that company that you're also placing. Do we understand what they're saying? They want you to be net zero. Now, I don't know enough if the report said both sides have to be filled or not, but they don't even want the orders to go in. So the other day we found out they don't want to tell us about youth unemployment. Now they're telling you they want to support their market, and they've done this before, by the way, by not allowing sell orders to go in certain parameters, and you think they're being transparent. Well, I think they are too. They're telling you that the transparency is we are going to rig our market, and if you want to trade it, that is terrific. Then come and do it. I call that full transparency. I don't see what's wrong with that. When you take a look at the platinum market, lower highs, lower lows, embedded readings, still very much in the bear camp. And as long as you have this bullish embedded reading here, up and away you go. Notice how suddenly the 200-day average is still trying to be support as you go up to the resistance of the upper Bollinger Band. These numbers come in and markets stop at them for all the important reasons. Learn charting. It's really important. And you get ideas. You know, slip back through 102.65, let's say. You got a problem in the market. That'll break that pattern. But even then, you have to get the red line under 79 for it to be anything more than a correction in a market that's really staying very strong. So again, my report is out. Special report, 30-year bonds, iraepstein.com, under the word research, or click up here to get it. That's simple. I'm Ira. You have a good day.